Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. Today we have the Rockstar, apartment rockstar himself. I just lost my spot. There we go. Robert Martinez. Robert is from Houston. He is from Rockstar Capital, focused on apartments. We love having apartment guys on the podcast. Anybody in commercial is our favorite. So Robert, thank you very much for hopping on the show.
Hey man, happy to be here.
Absolutely. I told you before we hopped on, we like to start with stories. We like to hear how people got to where they are today. So why don't you take us back to the beginning? How'd you get started in real estate?
Yeah, so like a lot of people, my first mentors were my mom and my dad. They said, go to school, get good grades, because that was something that had been taught to them to do. So then you go to university professors and they say, hey, get good grades so you can get a good job. So I did that for the next 10 years. I have an engineering degree from Texas A&M. And what I learned in corporate America is that corporate America would dictate to you how much you can make. So even though I want to make here, they want you to make here. So I was a sales guy. And so they would play with my bonuses, play with my commissions, play with my territory and structure and what have you. And I realized I did not have control of my financial future than my employer did. So I began looking around and, I stumbled upon a real estate show on business radio in between my sales calls. And it was a real estate club in Houston, Texas. This is in around 2006. And after several months of listening to that show, I decided that I would go to the 2-day boot camp, pay $500.
$500, that's not bad.
$500. This is in 2006.
Yeah.
And I got introduced into single family real estate investing on Saturday. Okay. Thought that was a great way. I thought, I went home, told my wife at the time that I'm gonna do this. And Sunday comes around and it's multifamily investing. And that's when I learned, wow, this is where the real wealth can happen.
Wait, did you go to the wrong room, or did they just change their topics
they just teach you both, right? Because they have different educational channels. Do you want to focus on single family or multifamily? So Saturday was the single family. And I thought this is what I wanted to do because my thinking was small.
Okay.
I thought I just wanted to buy a few rent houses to replace the bonus or the commission that I was losing from my employer. And I show up on Sunday and I get introduced to how you can make real wealth. And what happens when you, as I know this now, is if you don't have any money, you start out in wholesaling.
Yep. Absolutely.
Then you get a little bit of net worth, you get into single family. And then you realize I have too many single families and you aren't making a few dollars. I want to put more money to work. How do I do that? And you do that through multifamily. So I was able to skip wholesaling and single family because I had been very successful in my corporate career. And so was my wife at the time. And so we jumped into multifamily. So I paid $10,000 at the end of that Sunday to join that real estate club. And they introduced to me the concepts of multifamily investing. Had a mentor assigned to me. We talked about what my goals were, and then they had like a hands-on bus road trip where you go to a member's property and you get to touch the brick and visit with the staff. He shares the financials with you, and you learn that way. So during that time, I met a partner there, and I'm not a big fan of partnerships. I don't like partnerships. Okay. I think partners should have a beginning and should have an end.
Yep.
They should. Sense. And he had something that I needed, or that I had, and he had something that I needed. But you got to carry and break that on. So he had balance sheet, and I had local area knowledge. But he also had the real estate knowledge, not multifamily, but just real estate knowledge in general. So he and I joined forces, and over the next 3 years, we'd go on to buy 10 deals, right around 2,000 units. And again, this was in 2007 through 2011. And that's during the recession.
Wow, that's right over.
So this is a very familiar market to me. What's going on right now in the economic climate we're in, where we're about to enter a recession. But I got us through. I was the operating arm. I oversaw all operations, all training, all marketing, everything having to do with how that apartment ran. And I was kind of learning it on the fly. We did really well in our first deals, and then I took that knowledge. We went to another deal, did really well there. Went to another deal, refinance, 100% cash out during the recession. We did 3 of those. Very proud of that. Who has debt during a recession? We did, because we had the NOI to do it.
Yep.
And so in 2011, again, partnerships end, right? Somebody's stack is bigger than the other, and conversations were had. I leave that past behind, and I saw Rockstar Capital. My very first deal was bought in 2010 as the solo GP. And, in a market just like this, where you have declining rents that are about to start happening, that's next, and you start getting sellers that are desperate, which is what's next. And you only lose money in real estate when you run out of time or money. And that's what was going on during that time. And I wound up picking a deal up for $24,500 a door. And it was it was 118
in Houston. That is great.
Yeah, it's crazy, man. But this is what the market we're in. I tried to get the deal in 2009. They wanted 3.2 million. We negotiated for a couple months. They came down to 3 million. We said no, we want 2.9. They wouldn't do it. They budged in the beginning Q1 of 2010, and they said you can have it at 2.9 if you'll close in the next 30 days.
Oh, I hate it when people
and I was
do
able
that.
to raise the
come
equity.
on, 30 days.
That's fast. We actually did in 27 days, and I'm shocked because you had to raise the equity. You had to get bank financing because it was a bridge debt at a interest rate similar to what we have today. So I'm saying this is a very similar market, and appraisals and all the things you have to do, right? Because the market was dead.
Yeah,
that's what's going to happen. The market's going to die for a little while, and there's going to be surplus of professional services. And so at that time, we could get a deal done in 27 days. But that deal, and your first deal is always your most important deal, because that's what you plant your flag on.
Yeah.
So,
and if you don't have success in that first deal, it is hard to pick yourself back up.
Absolutely. So we've made roughly 300% cash returns to the investors. If we were going to sell today, it would capture something close to 900%. We paid roughly, we paid 2.9 million. Before the fall earlier this year, we were going to try to sell it at somewhere in the range of 14 million. So we would have made, again, pretty close to 1,000% return. But, market changes. It didn't happen. I now realize I want to keep the deal, but a lot of the lessons that I learned in that deal are what people are going to go through right now.
Yep. And before I do want to jump into the current market, because it sounds like you have a lot of great wisdom there. But before you do that, I want to wrap up your story. There was a lot of good things that you said in there, a lot of things that I kind of want to tease out. You mentioned at the very beginning, you said you were kind of stuck in small thinking, and you had to get through that to get to multifamily apartments. I really like that you said that, because I went through the same thing. So many people, when they just get into real estate, they feel that they need to start small. They feel they need to start at wholesales. They need to start as a single house, a single unit, but you don't. You can skip that stage just like you did. And so how did you kind of leapfrog the wholesale, the single family flips, that to get the confidence to go into multifamily right from the get-go?
Well, I had net worth. So making $10,000, $20,000 on a flip or on a single family house doesn't do anything for me. Yeah. I needed my first deal. I put 200,000 in. Again, I was successful in corporate America. Yeah. My wife and I were making, well into six figures, like something close to 600,000-700,000, combined. And we had done that for several years. So we had money put away. And that's what I was trying to say. If you don't have that, if you don't get that opportunity, everybody starts at wholesaling and then they work their way up. I needed more money. It's like when you go to Vegas, right? A $50 bet doesn't do anything for me.
Yeah.
You got to make a bigger bet.
Right.
But then I don't want to risk it. I don't want to risk losing $500, even though that's what it would take to get my attention, right? So I really liked being able to jump into multifamily. But again, along the way, you're still going to have small-minded thinking. I was just doing one deal a year. So I missed some of the recession. I got some good deals. Many of them I still own today, but it wasn't until later when I realized, man, I need more units, scaling, right? Because units create opportunity. It creates income. Income means more money for your property manager. They hire a better property manager. More income means a bigger marketing budget. And more income means that I can make more money per deal versus, I'm going to be there anyway. So I might as well make the most money I can.
Yep. And I've said this a few times on this podcast, but one of the biggest mistakes that I made when I jumped into commercial was I thought that buying a small deal meant it, I could reduce the risk. So I bought these really small self-storage facilities. And that's the exact opposite. You mentioned it yourself. When you get big deals and have that bigger, the bigger gross revenue, you actually that decreases the risk, because now you can take care of all of the, maintenance that has to happen. You can hire somebody who's a really top-notch property manager. So starting small, I mean, I totally agree. It's hard to jump over that hill, but if you can get there, it's definitely worth it.
Yeah, fast forwarding today, I mean, that was back in 2010, and I now have over 7,000 units of experience. I've sold, a couple thousand units. I'm at 5,000 units right now, 24 communities, and my claim to fame is that I'm a 2-time National Apartment Owner of the Year. So having joined that real estate club created a new opportunity, a new path in life for me that eventually will create generational wealth for me and my family. But if I had never taken that step to get away from small-minded thinking multiple times in my life, then I never would have gotten to the next level. And now I'm doing it again. Now I recently got out of property management, which is what my company is known for. We've earned 19 City, State, National Apartment Association awards from 2011 to just recently. 2 months ago, I decided I'm going third party. And I went in and hired one of the best property management companies in the country. They got over 120-some thousand units. But you have to earn that, right? You can't just go there with 500 units. I got 5,000. I give them a 20% market share in Houston. They want that, right? But now I get a professional group that, I was doing it mom and pop in some ways. Some ways I did it the right way. Other ways, I was doing it wrong. Now I see what they're doing, but they've given me now multiple things. Now scalability. Yeah. It's all here. I want to scale. I want to buy deals, but I can't buy deals if I'm worrying about HR issues. 2 weeks notices, people quitting unexpectedly. Like that slows you down. So I've learned to stop treating my business like a hobby and to treat my business like a business. And one of my mentors has been Grant Cardone. I've done a lot of coaching with him. We've been connected since 2016. Now I'm his #1 student in his real estate club, primarily because I pay attention to what he says. Yeah. And he told me a year ago, dude, get out of property management. I know what you want to do, and you're slowing yourself down. You're dealing with ice storms. You're dealing with whatever issue. You're dealing with COVID. Like, what if you didn't have to deal with any of that shit? What if you could just go and asset manage and buy deals? Yep. Right? Take advantage of what you've learned the last 10 years. Don't keep doing the same thing, wearing horse blinders just because that's the way somebody taught you. Yep. Like, now it's time to get rid of what slows you down, get rid of that anchor, and take off.
Yeah. Yeah. And I have so much respect for property managers, because that is a job that is extremely hard. It's actually because I couldn't find good third party is the reason that I got out of mobile home parks and got into self-storage. There's good third party property managers out there. And if you have a good third party property manager, you can focus, just like you said, on the business itself. So you attributed, it sounds like, a lot of your current success to that first REI club, the $10,000 REI club that you joined back in, what was it, 2011?
2007.
2007. Okay.
January
so that was very integral to, looking back, hindsight 2020. Looking back,
mentorship is everything. You got to get mentorship. Right? Nobody comes out of the womb knowing how to do real estate investing. Somebody has to show you. So my mom and dad, they were blue collar. My dad worked at a fast food company. My mother worked at a factory, and it's like, who's going to teach me real estate? When we all know there's been more millionaires minted from real estate than anything else, right? But who's going to show that to you? I paid $10,000 and I got introduced to somebody who was a multimillionaire. And before my time was over, I was the #1 student in that club. And now that I'm in Grant's club, I'm the #1 student there. I mean, they literally formed the real estate club around me because they knew who I was. And they basically said to me, listen, if we were to do this club, would you join? I go, where do I sign? So I was literally member 001. I paid the cheapest initiation fee because I bought on the earliest. It's like almost twice that now, right? Because of the success we've had in that club, right? Yeah. And where else can you go and there's a billionaire in that club? Yeah, on the call every single day. So I've taken a lot of that, and that's helped me scale the last 2 years.
Yeah, I got a lot of respect for Grant Cardone. He's done. He's been buying property for 30 years, so he's got some wisdom up his belt. this is an intended small, shorter podcast. I feel like you have so much wisdom that I wish we could be on here for 60 minutes, but we can't. I want to move us on a little bit and talk about the current market. You've already kind of brushed on it yourself. We are going into what a lot of people think will be a pretty extensive recession. So what tools, what tactics do you recommend new investors, established investors use as we go into this recession coming up?
This will be the greatest recession we have seen since the Great Recession. And the reason why this is going to be so bad for us is that it's artificial. What's occurring is bullshit. This is just like COVID, which we all know now was bullshit, right? They purposely have increased the rates 4% in 1 year. And so what that's done now is that's created tremendous uncertainty in the market to where buyers and sellers are shell shocked.
Yeah.
Right? Because buyers all of a sudden want to get deals equal to that 7.5% interest rate on the caps. And sellers are like, wait, what's going on? What just happened? And you only lose in real estate when you run out of time or money. They have a little time left, but next year is going to be the largest expiration of loans ever. And it's going to be huge. And so they're going to run out of time and they're waiting to the last second before they can sell a deal. It didn't have to happen though. Right. The Fed did that. But what it's going to do, it's going to expose a lot of people because people thought that real estate investing is always going to go up. Rents are always going to go up. Cheap debt's going to get there forever. I'm guilty of it too. The difference is that I was around during 2008. Like I'm one of the OGs. I'm a wartime general. I've seen multiple recessionary type economic climates. So I know to be well stocked for the long winter because winter is coming. I also know that I needed better operations. So I made that call earlier this year. I was like, hey, I'm going to get out of ops. I want to bring in another group that has more eyes on this than just me. And I'm going to watch them like a hawk because I never hired third party until now. I did it myself. That's why I'm a 2-time national owner of the year because nobody can bullshit me on what operations are. So believe me, when I'm on those portfolio calls with that third party company, I'm on it. I call them.
The questions to ask.
I know what I'm looking at. I know what they're talking to me about, and I know what they don't want to talk to me about. But I know what I'm going to talk about. And so I take control of that meeting because it's my investors' capital. I've raised $180 million since 2011.
Wow.
I've returned $130 million in cash. But right now, on some deals that I have where we have interest rate exposure, there's no more cash flow. Cash flow is going straight to the bankers. Yep. We're making a fortune on this, all because the Fed decided that they're going to raise the rate.
Yeah.
So there's no cash flow. So my focus now is to focus on NOI. So what people need to be doing right now is making sure you cut back on expenses, making sure that you hold cash. Your investors are not going to like you for holding cash, but you've got to save the body and not cut off an arm right now. And you got to tell them we're in trauma right now. Yeah. You're in the trauma ward of the hospital and we've got to control the bleeding because we just got beat up. And but I'm going to fix the body and we're going to be okay in 18 months. But let me do what I have to do. And so communicate with your investors what's going on. Number 2, make sure you focus on your resident reviews. Reputation management is everything in this business. Make sure you know what you're looking at. Make sure you know what people are saying and then act on that, either directly with your property manager or with your third-party property management company. Make sure that they know what people are saying. Create every channel you can for people to communicate to you so you can explain what's going on because you don't want to lose residents during this long winter.
Do you have a fixed, CapEx reserves that you do maybe per door, a percentage of your gross revenue, something like that you put in the bank for your entire portfolio? Do you have like a metric that you try to hit, or is it just you want, $10 million, whatever the number is in the bank, just in case shit hits the fan and you need to use it to bail yourself out?
Yeah. So as you know, the bank will always reserve some money for you, right? So there's always a $250, $300, CapEx. We're talking CapEx. All CapEx projects are on hold unless they're life safety. So we're not going to spend unless we absolutely have to right now. So all renovation plans, whatever, are suspended and we're going to hold on to our cash. But we always walk into a deal with no less than 6 to 12 months reserves. And we maintain that. That is our point of no return. We don't get below that number. If we start getting below that number, it's because we have issues. You got to fix that. So that's how we survived COVID, is that we had money in the bank. So I kept distributions going. This is different though. I knew that was artificial. This, I don't have control when the Fed decides that they're going to push rates back down. I will say this, Grant was in town a few weeks ago and he's doing a new reality show. And he invited me as the local real estate expert to be on the show and close it out with him. And we made a bet. He said, do you think rates will be lower or higher this time next year, which was Halloween? And I said, they'll be higher. And he said, no, I think they'll be lower. And he goes, and I'll bet you $1,000. And I said, look, Grant, $1,000 doesn't do anything for me. How about we make it 10,000? I know you're a billionaire. You got it, right? You probably worth
Come on, that's like $1 to you, Grant.
It's like $1. Like, oh, well, I didn't want to take your money. I'm like, oh, you're that sure? He's like, I'm sure. So we have a bet, Halloween of 23, that rates will be lower. I think they'll be higher. I hope I'm wrong. I don't want to be right. But I'm going to tell you this. I also
hope you're wrong.
Billionaires aren't wrong very often.
That is true.
He knows something. He's seen something. He's got better access to data. I hope he's right, because what goes up fast has to come down fast too. It's just like COVID. It was an immediate turning off of society, and they turned it back on. Now there were stipulations, but they turned it back on. And all of a sudden now, COVID's wasn't really real. The vaccine didn't really help you, but you know what? But you got it in your body.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
You put it
COVID did kind of like just taper out over time. I felt like it was a big thing, and then people just stopped talking about it all of a sudden.
Yeah, it pisses me off, man. I mean, I'm getting a little agitated.
It's all right.
It ruined people's lives, you know? It hurt people. People went out of business because of that.
Yep. But we're going to reel it back into real estate because we're not here to talk about anything else. But I like what you said. So you said you have 6 to 12 months reserves is just your standard, SOP that you guys do whenever you buy a property, 6 to 12 months operating reserves, obviously. So you also mentioned you're looking to cut expenses. Is there anything specific that you like to focus on when you cut expenses? Anything that is, you'll look at the P&L and you'll just point it out automatically, this is what needs to be cut, or do you do a case-by-case basis?
Yeah, and the reason why I deferred into that, because you got to prepare for market manipulation. Mm-hmm. That's real. That wasn't around before. COVID was a market manipulation. Right now, the Fed just deciding in 10 months they're going to raise it 4 points, and probably again in December, and maybe another one more time in March. That's market manipulation. So these cash reserves, you got to have. Yeah, it's better to ask for the money up front when you do a deal, or to hold back distributions, than to ever have a cash call, because a cash call is the kiss of death. Yep. So one of the other things that we're going to do to control expenses is control your move outs. I'm telling you, I'm going to go back to what I said. Reputation, you can't cut enough expenses to replace what you're going to spend when somebody moves out.
With an empty unit, for sure.
You're going to have vacancy loss, marketing costs, and you're going to have $3,000 to $4,000, $5,000 of getting that unit ready that you didn't need to spend. Yep. It's better to give them no renewal increase and keep them there during the cold winter than it is to try to get anything and risk having to spend $5,000. And on a 6 cap, that's a lot of money.
Yeah. Yeah, I 100% agree. I would rather have a full property at lower rates than a property that's 50% occupied at a little bit higher rates. Absolutely.
Yeah, I mean, look, a $5,000 move out is $83,000 of lost value at a 6 cap. Multiply that times 10.
I love looking at individual units and just finding the value at a cap basis, because then it really shows you the value of one unit. I mean, you just said $83,000 in value.
83,000, 5,000 divided by 0.06 is 83,000 for everybody trying to do the math. Yep. And when you see an $83,000 hit, you're like, I don't want that to happen. Your hair should go up and like, what can I do to keep $83,000 from walking out that door?
Yep. And so in your mind, you're saying just retain your current basis. All of your tenants, make sure they don't move out. It sounds like you're saying don't increase rents, and then do whatever you can to make sure that they stay on.
You got to have open channel. It's not about just resident events. It's actually when you go to their apartment, it's time for renewal. Take your little notepad like this and say, "Hey, Mr. Martinez, I'm here to do your renewal. Let's walk your unit with you." And you go in there and you look at everything and you answer them and you give them value. Like, we're gonna fix that hole in the wall, or we're gonna repaint that, or we're gonna do a dishwasher replacement. So you change out the dishwasher, but you act like you care. You just don't send an email and say, "Here's your $75 rent increase."
Yeah.
Because then they're gonna go like, "Well, do I feel like paying $75?"
I didn't even talk to anybody. No. What are you talking about, rate increase?
First time I've seen you in 12 months. Yeah. But if it is going to be the first time you see them in 12 months, review their work order history, take that pad in there and listen to them and let them talk. Let them keep talking. Let them vent it out. All the frustration of the last 12 months, let them get it out, write it down, and I bet you triple the chance of that renewal.
Absolutely. It's amazing what just listening to a person will do. And a lot of the times when a customer is angry, it's not that they're angry at you, it's they're angry at COVID, at the increased interest rates, all these other things that are happening in their life, and you happen to be the unfortunate receiver of that anger. And so if you just listen, a lot of times it'll dissipate. Man, Robert, I have loved absolutely everything you've said. I really appreciate you coming on here. I did take a peek at the clock. We have gone through our time, so I have to push us into the quick question round.
Let's go.
Let's do it. All right. Starts with books or any form of education. I need 2 recommendations. Give me one for real estate specific and then one for general life wisdom.
I mean, number one I would do is Rich Dad Poor Dad. You got to understand the game of real estate. You got to understand that money is your friend, that it should go out there and make new friends and bring those friends home for a house party. Like, that's what you get. You got to understand the power of real estate. Number 2 is that every goal you've ever had, you underestimated. You didn't hit it because you underestimated the work. So Grant's 10X book was a life changer for me. You've got to write down your goals. You've got to put 10 times the effort to get what you originally hit. No, and so if you want to be a millionaire, why aren't you saying 10 million? If you want to be a 10 millionaire, why aren't you saying 100 million? Try to get to that number. And I guarantee you'll not only hit your original goal, you'll get further down the map.
Nice. I actually, I never, I love Grant Cardone. I follow all his stuff, but I never picked up the book. I didn't know that 10X was 10X the effort. I thought it was 10X, have your goal and then 10X it. I didn't realize he was saying also whatever goal you're trying to achieve, it's going to take 10X the effort than you think. I really like that message.
You've always underestimated what the effort necessary to hit that goal. So make the goal so big, 10X in this case, that you have to now have the effort. And not only will you hit your subconscious goal, you might even hit that 10X goal.
Nice. I like that. That is a true message if I've ever heard one. And that moves us to the next question. This is for your younger self. So if you could go back to the Robert who was still in his corporate job, just thinking about buying that first single family, walking into the doors of that club, go back to him, look him in the eye, give him one piece of advice moving forward. Man, trust yourself before you trust anybody else. You don't need a partner. You need yourself, because you're the only person at the end of the day that you have to look in the mirror to and answer to. Play for the guy 10 years from now and say, hey, did I do a good job? Right? Because 10 years from now, you're going to, one day we're going to go to heaven and we're going to find out who we were supposed to be. God's going to show you who you could have been, and you're going to see how close you came. Right? So always put in that time. Trust yourself. Don't go slow. This is the best. Right now, what's going to happen with this buying opportunity, I'm going to tell you, this is just like 08, 09. You got to wait out the first 3 innings. People are trying to buy deals right now. That's stupid. They're fools. I'm telling you right now, I'm a wartime general. Don't buy deals right now. Wait until the 4th inning. That's when you're going to start to see the real deals come around. I'm talking the end of next year, 3rd quarter, 4th quarter, when guys get desperate. They have to sell. Right now, nobody has to sell. And that's why you're not seeing anything. So just go fast and figure it out later. Nice. I actually just took a note because that is a really good point. I've actually been looking at a few deals, self-storage deals that we've been thinking about buying, but you're absolutely right. Sellers' expectations are 6 months ago and buyers' expectations are 7% interest rates. So there really is a mismatch. And, you're saying end of next year. I'm going to have to remember. Well, yeah, because they're not market sellers right now. There's nothing that's making them sell into this market. But when they run out of cash because their interest doubled to their debt service, or when their loan gets close to expiring, if their loan doesn't expire until December of 2023, they're not motivated to sell right now.
They're going to hope that the Fed's going to come back down. They need cap rates to come back down. They know what cap rates should be. They don't want to sell at that number. They're not going to become a market seller until the market dictates to them they have to sell.
Makes a lot of sense to me. All right, that moves us to the next question. This is your Superman strength. We are all gifted with strengths that we uniquely give this world. So what is your Superman strength?
I am very easy to admit when I've effed up. I'm very good. I will fall on my sword, but I will get right back on and I will fix it. I don't have a problem talking to anybody and admitting where I went wrong. Any decision in my company is my fault because I put that person there or I didn't oversee it or whatever. Admit you did wrong and then go fix it. That's number one. You just got to make sure that, and I'm really good at that. I'm good at admitting my errors and moving forward.
And on the flip side of that, that means you have very clear vision of what's actually happening. Because if you can admit your errors, then you're not going to be blinded by yourself trying to cover up your mistakes. So love that as a strength. And I'm going to move us on to the next question. You've already mentioned this a little bit. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
I have two. I have my very first mentor. His name was Dell. He owned the real estate club. He introduced me to the concept of what real estate investing could be. Joining that club created generational wealth. 10,000 turned into 50 million plus because of him introducing that to me. My next one would be Grant, because now I'm at a certain stage in my life where I'm midway through my career. I now want to scale. And there's not anybody that knows how to scale like Grant. And I'm watching him and I can get that message and I get the mentorship from him, whether it's a personal phone call, a text message, or just a big group setting. When he's just like me, he just starts talking and you hear the experience come out. And depending on where you are in that career track, you're going to hear what he's saying a little bit different versus if you're a newbie, he says something, you're an experienced guy, he says the same thing and you're going to hear it. You're going to hear what he's saying in between the lines. And so I've had a lot of personal success, the last 36 months as I've gotten closer and closer to that epicenter of Grant.
Nice. I love it. And yeah, the people who are just maybe one or two steps in front of you, at least in my experience, the people who are just ahead of me, those are the people that I really, whatever they say, it really clicks for me. If you're like 10 steps ahead of me, it doesn't click that well. If you're behind me, it doesn't really matter. So that makes a lot of sense. And I'm going to move us on to the next question. This is location, the United States. It's a big place, a lot of opportunity out there, a lot of square miles to buy. So what is one metro you are most excited about investing in today?
Again, I'm going to follow the billionaires, right? Anywhere in the red states, I'm going to be happy. Texas is a fantastic migratory state. Florida is a great state, but it's very expensive. People are going to go there. At some point, they're going to want to find value. They have found it in Dallas. They have found it in San Antonio. I think Houston has been very stable. We don't have a lot of the ups and the downs. Well, we don't have a lot of the artificial highs that have been everywhere else. I think we're extremely affordable, the most affordable big city in the United States. And I think investors will have, fourth largest, city in the United States, and we have the cheapest rent of those four. I mean, we are very affordable to live here. It's a red state, so government interference is at a minimum. Versus on a national level or in the blue states, California should be a dream Disneyland, and it's not Disneyland. Nobody wants to be there, right? Because of what's going on there, and so, I love Texas and I'm going to keep buying in Houston. And, I love secondary markets. I love markets that are south of Houston, even tertiary, right? Because there's still population growth and there's less competition and there's not a Robert Martinez there doing what's there. So I come in there, I do my magic dust, and I can really make a property sing. So with little competition. So I like tertiary markets as well.
Nice, man. I love Texas too. We bought 3 self-storage facilities in Texas. I'm a much smaller operator than you, but we bought 3 of them. We love Texas. We're looking for more. Texas is a great state to buy in. And that moves us to the very last question. You've given us a lot of good advice, a lot of good wisdom. I'm sure people want to reach out. What's the best way for them to do that?
Yeah, you know what? I love making friends. I love sharing knowledge. Number one is I want to invite you to my Instagram page. I have tremendous amount of free information there. I talk day to day. It's, nonstop storytelling on my stories. So at Apartment Rockstar on YouTube, we've done a tremendous job of pushing that out. You'll see my Grant video. You'll see last year where Grant crashed my mastermind during the World Series and made a surprise appearance. It's his way of giving back to me and helping me out, and that's all over YouTube, right? So just feed yourself. It's not like, when I joined the real estate club 20 years ago or whenever it was 15 years ago where I had to pay money. You can watch guys online now. You can hear what they're doing and you can get into the game. And then, get a little personal mentorship if you want to reach out and try to get some one-on-one coaching, whether it's a phone call or a Zoom call like this, or somebody actually giving you the map. I mean, that's what it's about. Pay for that education. Before you invest in anything, you have to invest in yourself. We have coaching here at Rockstar. I would love to work with everybody. Give us a call at 832-942-1196.
All right, perfect. And I will put that number and the links in the show notes, theapartmentrockstar.com and at apartmentrockstar. I'll put that all in the show notes. So if y'all want to follow Robert, go ahead and click the little more in the description. It'll pull down the full description, and in there you can find those URLs. Right on, Robert. Well, that wraps it up. Again, thank you very much for hopping on the show.
Had a good time, man. Thanks so much.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.